Hello, everyone. Andy Pickering here. Welcome to the Crypto Conversation podcast. Today, I am joined by my brave new coin colleague, Mr. Aditya Das. Welcome to the show, Aditya.
Hi, Andy. Thanks for having me. Looking forward to our discussion.
Yes, indeed. I am too, mate. And well, our discussion today is going to focus on the Bitcoin ETF, really. So you wrote a nice piece for bravenewcoin.com last week, and I know there was a lot of traffic generated to the website from that piece. And I suppose that's because obviously the Bitcoin ETF has been very big news, right?
Yeah, it was a massive deal for the industry and basically dominated the crypto news cycle and kind of the traditional finance news cycle for most of the last week. I mean, I think on the day of the ETF, the term Bitcoin ETF was the sixth most trending Google search term in the United States, just below Kanye West. So it kind of gives you a sense of how big and massive a piece of like a financial event this was, and for good reason, which we'll get into.
Absolutely correct, my man. So I thought the easiest way to do this is maybe if I share my screen, then we can have a quick look at some of the, I guess, the key points from your article. And then we'll do what I often like to do, which is just kind of run through some of the ETF commentary on Twitter from the wider crypto ecosystem and the crypto Twitter talking heads. So of course, if you want to follow along and look at the visual references that Aditya and I will use, then please do watch this on the Brave New Coin YouTube channel. But of course, you can simply listen to this as a podcast on Spotify or Apple Podcasts as well. All right. Well, Aditya, just before we look at your article, I thought we should probably just start here because we have just closed out October, more commonly known as Uptober. And well, Uptober was a meme, but it did prove correct. So October closed with a 40% return for Bitcoin, that's not bad. What do you reckon?
Yeah, I mean, October plus Q4, it's, apart from 2018 and 2019, it's just Q4 is the time to back Bitcoin. And Q1 is the time to back alts. So yeah, just like clockwork, correlations, come through. And yeah, October always hits for Bitcoin investors. And this year's been no different. There's just something about this month that, there's big announcements and fundamentals come through. So yeah, it's awesome to see.
Yeah, that's
something
right.
of a self-fulfilling prophecy.
It is. That's exactly it. It has become a self-fulfilling prophecy. And I guess, well, the test now is whether the prophecy can be fulfilled in terms of Q4. So now we've got November and December to come. So we'll just have to see. I mean, Bitcoin has kind of just really been chilling around 60K since we hit a new all-time high. It was about a week ago now, or even a bit longer, but haven't been able to push on. Yeah, what are you thinking? Are we going to push on for November and December?
Yeah, I mean, I think fundamentally the tailwinds are there with inflation pressures, and there are macro indicators that suggest Bitcoin should enjoy a strong rest of the quarter. With an all-time high just being hit, profit taking is obviously going to occur. When you hit an all-time high, every single investor is in profits, so some of those investors are going to exit knowing that they're in the green. So it's normally the case that after you hit an all-time high, there is a period where the price will drop. However, I think there is new money coming into Bitcoin, and just more exposure, more eyes on the assets. So I'm expecting the rest of Q4 to go pretty well.
Yeah, well, me too. So we'll just have to wait and see. Go Q4. In the meantime, so this is your piece on bravenewcoin.com. Very nice title. The Bitcoin ETF was an historic moment. It certainly was. So what happens now? What happens next? I guess, yeah, I mean, from your perspective, why was Bitcoin or the approval of the first Bitcoin ETF? Why was it such a historic moment? Just give us a little bit of context, because I know this has been a long time coming, right?
Yeah, well, I think there are a couple of reasons why it was such a big deal. I think historic, if you look at what happened with gold when it received its ETF, now a third of all gold demand is paper gold. So it just massively expanded the market. The fact that you can now invest in Bitcoin without needing to worry about custody or insurance, you can just have this paper form that trades on a stock market. It just, simplifies the investment process for a number of different investors, particularly large investors. So, when you buy like a massive stack of Bitcoin, I think we all, kind of understand, if you've been in the industry for a while, the sort of key management and the sort of cold storage that, comes along with it. So just like when Bitcoin futures were first, announced and people could, gain exposure to Bitcoin without actually having to deal with physical Bitcoin, the ETF kind of has a similar impact. So just massive expansion of the market. I think the other reason it's a big deal is because of the reasons why previous Bitcoin ETFs were rejected. So historic in the past, they were rejected because of concerns about the size of the market and concerns about market manipulation. So the fact that US regulators were comfortable, accepting or allowing a Bitcoin ETF to trade indicates that, some of those concerns around market manipulation or the size of the market have somewhat, been, a thing of the past and aren't a concern to regulators in the US at least.
Yeah, that's right, Aditya. So I think rather than just kind of reading out your article, because I think, the best idea is I'll put the link in the show notes, and then people can read your piece for themselves. Please do read that piece, folks. And in the meantime, I think we'll just kind of look at some of the wider commentary, Aditya, and we'll get your comments as we go. So, I've probably got a couple of tweets here from this guy, Eric. I think Eric, he's one of the lead ETF reporters at Bloomberg. So, ETFs are literally Eric's beat, and he's been following this story very closely for quite a while. So just a few points that he makes. So the point in this tweet, what he's saying here is, one of the things that is bullish about a Bitcoin ETF, and even a futures Bitcoin ETF as opposed to spot, and we'll talk about that as we get deeper into the show. But what he's saying here is, ease of use is almost a killer app in itself, as opposed when it comes to a Bitcoin ETF. And the point that he's making is, a lot of financial advisors are really busy. They don't necessarily have the time to figure out exactly how they can get a Bitcoin position for themselves, or even, advise their clients how to do that. Whereas if they've got a Bitcoin ETF, even a futures ETF, then it is just such an easy no-brainer allocation decision for them. And even if they're only going to get 90% of that Bitcoin upside instead of 100%, which they would get in terms of holding spot themselves, then that's a fair trade-off, right? Do you agree with that?
100%. Simeon Hyman, who's the lead analyst at ProShares, he made a similar point when, acknowledging the difference between spot Bitcoin and ETF Bitcoin, and the fact that ETF Bitcoin, futures or physical, involves some sort of fees. Like, compared to legacy assets, when Bitcoin is offering you returns of, anywhere between 60% to 100%, and even more in the last like 2 or 3 years, it's kind of a no-brainer. It's compared to other commodities, when you look at it compared to gold, or I think it's just something that any kind of exposure to Bitcoin, just because of the enormous yields it offers, it just makes sense to financial advisors and their clients.
100%. And so this is interesting, because what's so fascinating about this is, anyone who thought that the Bitcoin ETF race was over after we had one launch or two launches, well, that's not the case, because there are, I think there's something like 50 Bitcoin ETF applications at various different stages of the approval or a denial process at the moment. So it's just, you can see that there's it's not even that the floodgates have opened, because there's always been all these applications, right? But there's the floodgates are open. There's a lot more applications coming, right?
Yeah, I think people have figured out like the secret sauce to get an application approved. So everybody is, let's get into the market as early as possible, capture some of this like hype-based initial AUM. I think we saw, how much ProShares benefited from being the first ETF on the market. We've already seen the volumes on their ETF kind of slow down a bit after the first few days of initial hype. The other thing we might also see is them undercutting each other and a bit of a price war going on. So the ProShares ETF launched with a 95 basis point fee, and VanEck, which is set to launch in the next couple of weeks, is going to launch with a 65% fee. Oh, sorry, a 65 basis point fee. So what may start happening is, just in order to get some of this early initial rush and hype, ETF issuers will be willing to undercut each other, and we might see like a bit of a price war in the Bitcoin ETF market, which is just awesome for consumers and buyers of these ETFs, because they're just gonna, push the price down as they compete against each other.
Yeah, that's right, Aditya. And you can see here, so this is just a quick chart showing the annualized rollover cost. So there's been a lot of commentary about, that's one of the downsides, if you like, I suppose, about a futures-based ETF that tracks the CME Bitcoin futures. So you got that rollover cost as the contracts roll over each month, right?
Yeah, so I go into this a little bit more in my article, but with certain hard commodities, and Bitcoin falls into this category, there is a premium between the futures price and the spot price. And essentially what this boils down to is people are willing to pay more for the asset in the future. And this happens, one, because there's complicated custody requirements and holding the asset involves a cost, and two, because they expect the asset to rise in the future. So just because the futures price is higher than the current price, when you roll over and go into like a longer term futures contract, so you're going from October to November, you have to pay a rollover fee. And yeah, so the ETF issuers, on the futures-based ETF issuers, need to deal with this on the back end, because what underpins these ETFs are futures contracts. So they need to absorb the contango premium, and how they pass this on to ETF holders is underperformance versus spot or higher fees.
Yeah, that's exactly right. And I know at the start of the show you mentioned how the launch of the ProShares Bitcoin futures ETF, it was, I think, it was the first ETF, the fastest ETF to reach 1 billion in assets under management. And so I think, it got there in under 2 days. And of course, famously beating that record set by the gold shares ETF way back in 2004. So were you surprised by that? That was pretty impressive.
Yeah, I mean, it was impressive. Also because it was a futures-based ETF. So, it was a slightly inferior version of an ETF, but I think it goes back to that original point of, Bitcoin exposure, and the high returns of Bitcoin are just so kind of astronomical compared to legacy finance that, just anything with the Bitcoin tag to it was going to be bought into. I think, and yeah, because of the long build up and anticipation, it didn't surprise me. I think leading up to it, we'd seen big volumes on the CME. So yeah, people were waiting for easier exposure to Bitcoin in the United States. So
yeah, so you can see during that week of launch, weekly crypto asset flows quite astronomical. They've dropped back since then, as you mentioned. So this article here, I don't know, it had a couple of charts, so I guess that's what I'm showing it, but it did make some good points as well. So I've always liked this idea, right? So, the idea here is, even if you hold any kind of like a 60-40 portfolio, any kind of investment portfolio, if you just add 5% exposure to Bitcoin, that is going to increase the return of your portfolio quite dramatically, isn't it?
Yeah, I mean, 100%. And the historic performance over the last 10 years is one thing. And I think once, you start studying Bitcoin, or you understand the way it works, the kind of increasing returns make more sense because of the nature of the supply, and things like the halving. It has mechanisms that mean that these kind of gains can be sustained over the long term. So yeah, I think the more you scope out, and the longer term you think, the more these numbers make sense. And yeah, they may initially seem quite outrageous, but
Yeah, and so I mean, and it's good advice as well, because new investors to Bitcoin often feel that they've missed out, and that they either don't bother or they need to go all in. Whereas you don't. It's just like add 5% to your overall portfolio, and let time take care of the rest. But this is another point, Aditya. So I suppose this is kind of a maybe a counter narrative to a Bitcoin ETFs. Who's making the money here? Is it the investor, or is a Bitcoin ETF just another way for Wall Street to effectively rent seek on Bitcoin by just giving the Wall Street infrastructure another way to charge fees, really, to newcomers to the space?
Yeah, I mean, 100%. It's the ETF is going to be great for the issuers and Wall Street, and things like trading fees, and for hedge funds and market makers, there'll be massive opportunities for arbitrage. With things like the Grayscale Bitcoin product, and the CME Bitcoin futures, institutions have been making massive returns on cash and carry arbitrage trade. And just like in a similar situation with the ETF, there'll be huge arbitrage opportunities for people with big amounts of capital. But I mean, nevertheless, I think we saw on the first day of trading with the ETF, the ProShares ETF, most of the volume was from retail. So, and we're seeing it right now. Kind of, this is maybe not the best comparison, but crypto is still a retail first product. We're seeing this with SHIB at the minute. Like, the demand is driven by retail. So I think, what may be happening is, it'll be from, mom and pops asking their financial advisors, can I have access to this Bitcoin ETF? Can you add this Bitcoin ETF for my 401k? I want these big yields. And so, yeah, I think although it will benefit the institutions, I think it will, benefit everyday investors too. Because those you can't beat those numbers.
Yeah, and I think Eric is making the same point here. He's basically saying what everyone on planet Earth, except for one person, can agree on is that spot ETFs are better for investors versus futures. And when Eric refers to one person there, he's talking about Gary Gensler
right.
at the SEC, because Gary. Well, just explain this briefly then, Aditya. So what is Gary and the SEC's concerns about a spot Bitcoin ETF? What's the problem with spot?
Yeah, maybe the best way to answer that question is to talk about what's right about the futures ETF. I think one of the biggest factors that the futures ETF was accepted first was because it trades on the CME and therefore falls under the jurisdiction of the Commodities and Futures Trading Commission.
Yes.
Spot Bitcoin does not have a regulator in the United States. It doesn't fall under SEC jurisdiction, doesn't fall under CFTC jurisdiction, and it's all kind of a big, jumble about who regulates Bitcoin, or at least spot Bitcoin in the United States. The other big factor with the CME futures being accepted is that they are cash settled. So this means that, there's no actual custody involvement. So security and having to deal with physical Bitcoin, which was a concern with previous ETF applications, is kind of taken off the table. There's also some legal finagling that the futures-based ETF applications have, where they, apply under some sort of mutual fund regulation in the United States, which also gives it, increased investor protection. So yeah, the main thing is that, they feel more comfortable with accepting a CME futures-based Bitcoin underlying the Bitcoin ETF as opposed to something spot-based.
Yes,
and where, it's more of a Wild West.
That's right. And I mean, sometimes a meme is worth 1,000 words. So, I enjoy this one. No to the Bitcoin spot ETF because we must protect the investors. But hey, if you want to have fun with even a small amount of leverage on a Bitcoin futures ETF, that is potentially no problem. But I just also, Grayscale, you probably have to expect that if anyone is going to have a shot at getting a Bitcoin ETF over the line, it's going to be, I can't see anyone more likely than Grayscale. Can you?
No, I don't see anyone more likely. I think they have the structure in place. Yeah, and they might be first, but it's just whether, they're willing to allow retail access to this, product. So yeah, I think that's the only concern. And some of these things are sort of perhaps just for show, because at the end of the day, whether it's a CME version of Bitcoin or whether it's a spot version of Bitcoin, there's still going to be price action and there's still going to be volatility, and that's just the nature of crypto.
But in the meantime, you are right. It is the nature of crypto. But Canada has had Bitcoin ETFs and spot ETFs for quite a while now. Maybe I don't know. I don't have it in front of me. Maybe a year or so. So has Europe and Australia as well. So you probably saw this. So this is in a piece in the Sydney Morning Herald from last week. Australia's corporate regulator has given the green light to a range of cryptocurrency-related ETFs, but I think specifically Bitcoin spot ETFs will be the first one. I don't know. Australia is not really known for being, super innovative in this space. Was that surprising to you?
To some extent. But I mean, they have a decent history with Bitcoin, and a number of key influential Bitcoin figures have been Australian in the past.
Yeah.
And yeah, I think Canada sort of led the rest of the world in terms of Bitcoin ETFs and shown how popular they can be and how they can trade without too much chaos, and they're not gonna wreck the market or destroy investors. But yeah, it's interesting that they also accepted an Ethereum ETF.
Yeah, and I like that they talk about in the article. They talk about best practice, right? And so this includes storing private keys and cold storage, robust physical security practices. I guess they'd have some kind of multi-sig situation, but yeah. So just interesting there. Go Australia. And I mentioned the leverage, the leverage-based futures ETFs. There are a whole lot of applications. Valkyrie was the one that was most likely to go forward, but they withdrew that, even though it was only 1.25x or leverage for ants. So SEC not keen on leverage just yet.
Yeah, I mean, it would have been quite interesting, as that meme pointed out, that before accepting, a spot ETF, that they were willing to accept something with leverage. So yeah, I mean, again, it was probably going to be futures backed. So it's like this weird middle ground where it's a CME futures backed ETF, but it's got the extra leverage.
And look, speaking of leverage, I like this one. You see how just a little bit of leverage, the outsized returns that are possible.
Yeah. And I mean, one of the things like that we're seeing in terms of like with the recent volume on the CME, which is the main institutional platform for US institutional traders to buy Bitcoin, is most of them have been longs. So I could see like a 1.25x, which is like a bull token. Every time the price goes up by 1, you get 1.25. That would be quite popular. It's just because everybody is as opposed to shorting it. It's like the Bitcoin long is really the trade right now. So yeah, I would have, that product probably would have done very well.
And just to change tack slightly, Aditya, I thought it'd be fun just to briefly talk about the metaverse ETF, since this really is a show about ETFs. I'm not sure if you are familiar with the metaverse ETF. So this was, I guess, the main advisor, or founder is the wrong word, but it's Matthew Ball, right? So and that's why it's called the Roundhill Ball Metaverse ETF. So listeners, if you don't know who Matthew Ball is, he's on Twitter. Here he is, and one of the kind of the lead writers, leading writers about the metaverse in general. So much so that Mark Zuckerberg, when Facebook rebranded to Meta a couple of days ago, Mark opted to have Matthew Ball interview him about Facebook's version or vision for the metaverse. But essentially what the Roundhill Ball Metaverse ETF is just designed to give investors exposure to what they think are some of the key metaverse companies. Have you seen much of about this?
I haven't. I mean, the Facebook news was hard to miss, and the metaverse is on everybody's lips at the minute. But I'm not familiar with this particular ETF. But I can imagine, exposure to companies in the VR space and in the digital realm. So yeah, companies. I'm sure Facebook will be added to this list, and
this is the breakdown here. So I was just scrolling through trying to find it, but this is from a couple of months ago. This was their initial investor deck. But so yeah, Facebook had a 6.8% weighting there, which is certainly one of the higher ones, right?
Yeah, and I think just in general, kind of within the technology space, there's sort of been a paradigm shift away from like traditional software and more towards things like electric vehicles and metaverses. And we're seeing kind of an expansion in thought about like the way we look at technology, and when software isn't really the hotness that it was 10 years ago. So now people want more innovation, bigger ideas, things like virtual reality and NVIDIA chip makers, things that are increasing the kind of scope of what we can do with the internet and with our devices.
Yeah, and you can sit. So again, here's our friend Derek, but just reporting because of Facebook's news. Obviously, that metaverse ETF saw a lot of interest as people decide to try and get some exposure to anything metaverse related. It's kind of the same thing with inflation themed ETFs. Those are just some of the key investment narratives at the moment, aren't they?
Yeah, and just a couple of points with the metaverse, values flowing in and the volume increasing. One thing we've seen in the crypto space is metaverse-centric tokens like Decentraland having massive weeks as people try to like front run the possible, metaverse investment craze that may be happening over the next 6 to 9 months. So anything like gaming NFT related or metaverse, virtual worlds, Sandbox is another one that had like a really good week, and things like Axie Infinities are all like bets people are making because of this increased exposure and eyes towards the metaverse. And yeah, on the inflation point, Bitcoin, this is one of the reasons of predicting Bitcoin will have a good Q4, because, it is traditionally an inflation hedge. It is kind of the antithesis of traditional inflationary fiat currency. So, and it was, that was part of the reason it was created. So, alongside other inflation hedges like TIPS, which is treasury bonds that are inflation protected. So as inflation rises, the value of those bonds increase. Things like gold, hard assets, and Bitcoin falls under that category of inflation hedge. So yeah, I would, it's part of the reason there was such a huge, rush for demand to get exposure to the Bitcoin ETF.
Yes, indeed. All right. Well, let's finish this off. Aditya, excuse me. I just also, this came out this morning. This was released just a few hours ago. I mean, it's been signaled for a while, and people knew that this report on stablecoins was coming from the Office of the Comptroller of the Currency in the US. And so I'm not going to go through this at the moment. I mean, if you're interested, so Jerry BITO from Coin Center put out a little bit of just a brief summary. But I think, basically, everyone knows that, again, all the regulatory bodies in the US, they're keeping a close eye on stablecoins, and they want to control effectively who can issue stablecoins, right?
Yeah, I mean, Gary Gensler has in the past talked about concerns surrounding stablecoins because, when you've got a US dollar equivalent where you can earn interest and lend it and do all these like funky things with it that a bank can do, essentially, yeah, they feel like they should be regulated like neobanks or banks, and trying to limit what stablecoin issuers can do with US dollar equivalents.
Yeah.
So yeah, it's been something that's been in the works or has been discussed in the past. Increased reporting measures and just clarity around what they can and can't do. So
exactly right. So sorry, listeners, or if you're watching this, I'm just flicking through this. If you can download that report from treasury.gov in the US. Let's close this out. Did you see this this morning?
Yeah, I did. NFT NYC. It's a huge conference that's taking place at the minute. Yeah, I'm really, really excited to see what comes out of this and some of the big announcements that may emerge. Just, yeah, what a year of 2021 has been for the NFT space.
Yeah, so this is Punk 6529. If you're at all interested in NFTs, and if you're on Twitter, well, you need to follow Punk 6529. He's very quickly become one of the, I suppose, thought leaders in the NFT movement. And so this was one of his initiatives earlier today to celebrate NFT NYC. Yeah, he took over the famous NASDAQ digital billboard and basically just broadcast some of the NFTs from his personal collection, and yeah, just quite incredible to see.
Yeah, it is fantastic to see this kind of the space getting this sort of exposure, and it's such an exciting time. And again, it feels like just the beginning. The fact that this is the first NFT NYC conference, and it's already getting such massive buzz and big names speaking at it. I think one of the big backers is Alex Ohanian, the Reddit co-founder, who's a big NFT fan himself. So yeah, onwards and upwards for the NFT space.
Onwards and upwards. Hey, well, thanks for coming on the show today, Aditya. This has been fun. Thanks very much. And
thank you for having me.
I'm sure we'll do this again soon. Bye for now.
Yeah, bye for now. See ya.
All right. Thanks, everyone. That was today's show. Thank you to Aditya for coming on and talking all things ETFs, whether that be Bitcoin futures, spot, leveraged, or the metaverse ETF. Yeah. All right. That's it, guys. Thanks again for listening. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using or here on YouTube. Bye for now.